All right, this is Felix. Trading Makes Simple, to whom it may concern. And so, when it has to do with trading, and of course, we know we have different types of trading strategy, and of course, pattern of trading. And there are a few things we always encourage people to pay attention to when it has to do with trading. Quite unfortunate, most time we come into trading without really establish the purpose of our trading. We actually think that trading is about making profits. Trading has to do with being profitable. Okay, you hear me right? Trading is not to make profit. Trading is an act of being profitable. So if you're just thinking of making profit, you will make a lot of mistakes. And so I will still teach. I've been teaching about this for a long time, about trading. And of course, I haven't known that I will call daily market movement for beginners guide. And outside all of this, we know that market trading has a tripod. I call it a tripod of trading. We have self, we have money, and we have market. And that's what I summarize to call SMM. Now, this SMM is very simple. And now, before you talk about trading strategy or pattern or style, now this SMM is that self is about self management. And that has to do with the psychology part of trading, where you need to work on yourself, discipline yourself, and then really be real on yourself, not gambling. And so the level of discipline you exert on yourself is depending on how you're able to work on your psychology as much as possible. So trading has to do with first, number one, self, then number two, money, and before you talk about the market. So what you need to study in the market is the behavior. And so we've said the self, which is the management of yourself, your emotion, and now your discipline, working on your psychology, they are crucial in trading. Then talk about the money, and then this has to do with risk management. So money, you can be in charge of your money, you can control your money. That is, you can control how much you can afford to lose and control how much you want to actually make. So it means you work towards how much you want to make, but you can't make anything without betting an amount. And so ability to control this will make you to be in charge of your money. Then market, you can never be in charge of market. I will repeat it. You can never be in charge of market. Market is larger than one person. So it is a behavior you understand and you study about market that will really define if you are going to be profitable or not. But let this be in you that losing money should not be part of your trading, then you're lying. Many persons don't want to see loss. Many persons don't want to see a drawdown. Yes, fine. There are some persons develop different strategy called ICT concept or smart money concept to reduce their level of drawdown and at the same time liquidations. And so this has to do with following some procedures and learning some things. But there's something many people do not understand about any trader that uses ICT concept to trade or smart money concept to trade. They don't trade anyhow. You heard me right? They don't find trade all the time. They can wait for a trade for 3 good days. You heard me very well. They can wait for a trade for 3 good days without have finding an entry. Yes. So if you say you are a smart money trader, smart entry, right? Sniper entry traders, they don't find trade all the time. But once they find, there are a higher percentage of them winning the trade than losing the trade. And they will have lesser and very low kind of stop loss. And those are the things. So if you are that, then be ready to be patient. Every ICT trader are highly patient. I'm talking about the real people who have gone through all of those procedures. It requires a lot of technicality. But once you get it, if it's one trade in a week, it's going to be one trade. If it's 2 trades in a week, it's going to be 2 trades. So, but are there other strategy and pattern to trade? Yes, of course. But these are basic things you need to understand about the market. So we say market move, markets, I call it CED market phases. CED market phases is contraction, expansion, and delivery. You can watch my previous video. I've talked about, contraction, expansion. And I call about trading, 10 trading magic for beginner. Every trader need to do what we call top-down analysis. I'm not going to go to detail. Then that means for you to trade effectively, you need to have some tools, broker or exchange in case of crypto. Then you need to have trading view to be able to understand the technical analysis. Of course, if you go by this is tripled of trading, then you have tripled of analysis. So tripled of analysis, for instance, talk about tripled, okay? The tripled analysis. The tripod analysis are, right, fundamental, so sentimental, and technical. So this is the tripled analysis. So fundamentals give you what to sentimentally think and then what to technically test. Somebody getting it now? Fundamental give you what to sentimentally think and produce the raw materials for what you need to technically test or check. So can we now say fundamental is a behavioral research study, and sentimental is now personal judgment, correlation to other people's ideas or what they feel about that thing. And then technicals, it has to do with empirical studies. So you're doing a research, you actually form what we call research questions and a hypothesis, which is personal, and that you take to the field to get reactions and issues, policies, and all this like, right? And that's the same thing in the market. Policies, government policies, crisis issues are factors in economy. We refer to them as variables. We have some that are dependent and we have some that are independent variables. So these things have effect on human behavior to react to taking decision on an action in the market. And so then we have external variables. So when you come to these, you now want to see what do people think about it. So in you too, you have sentiment. If this happened now, I think it should be this. Now you are now doing a guesswork, which is hypothetical, right? And now to really get the validity, you take all those things you gather and say, okay, let us see historical data, algorithm, and be able to correlate and then, plot the coefficient and forecast into the future that, if this happens so time and it's happening now, there are tendencies that it's going to happen like this. For that, what is my judgment? I believe that this have higher percentage or probability. For that, I go for this. And that's what you're doing in technical. So we have said the market movement, contraction, expansion, and delivery. Okay, so we're now going to go to top-down analysis, price action, candlestick chart. So when we talk about price action, just take your mind to candlestick and chart pattern. Then we talk about market structure. Take your mind to different candlestick combined together that make chart and then moving to give a particular threshold, then become a structure. And then it is the level of structure. It is multiple of structure, right? Because structure has to do with what we call swing. So we have a swing low or a swing high. So these two swings, and in their movement in several of swings, give you market structure. And the several of those swings as it is actually define what trend you want to see. Okay, so you can see I've done this to just do before we go to the chart. So this guy is you want to actually find a place of importance. That's why we refer to them as key levels, right? Area of that can be point of reversal, okay? That can be a reversal point. And so if it's going to be a reversal point, you now want to find a reference to that point and all of that. So then before you talk about the price action, so movement actions in candlestick and chart, and then that gives you another interpretation altogether. Then you talk about the market structure and then talk about the trend, demand and supply zone, support and resistance, liquidity, order block, FEG, So this is indicator, and that can help you to find your way sometime. So beginner's trading strategy, what I recommend for beginner is called demand and supply, support and resistance strategy. Recommended. For beginners. Now the tips, you need to understand the power of DCA, then power of 1:2 reward risk ratio, and then power of 5 fingers in the radar, all right? And then power of 1 instrument per trading, okay? So let's take it this way. Okay, okay, okay. So you need to understand all of these concepts, DCA, and if you can understand when you are trading, you can help yourself to an extent. Now, let's quickly look at a chart. Now, okay, I just come into this. This is a trading environment. Now, this is gold. There's a little bit for me to be worried about this gold. Why? And now another thing I always tell people, there are, okay, so I can add this for you as a tip. Power of, okay, 4R, 1R, M15, M5, and M1 in trading. Okay. Okay, so now let's go back to where we were. Now, this is gold. This is an area of importance for me, so which can be referred to as support and resistance. Here is its resistance, here is the resistance. You saw the previous time it came here, that's when it reversed from. But there's something very important that was not happening now. Then this is an area of importance. This is a resistance. Then the market dropped down, however, it didn't return back to the bottom as it were. It was able to get suspended here. Don't worry, I'm not going to do over advanced kind of theory. Okay, so let me take this line to be white. Okay, so we have this, and then the market actually broke and retested, which makes sense, right? But a little bit lower, and then we have this market get to that point, get rejected sharply. That was very nice. And then return back to this point again. Of course, actually broke and returned back. Now we're in the third time. However, there are some things we always pay attention to here, right? So now what we say in the place of support and resistance is that there are 3 things market does in support and resistance zone. 3 major things market does there. 3 major things. First thing market does here, look at this is a liquidity. This is a liquidity. Now, if you look at this, has not got to this, that the market will come, and this created a high before it moved down here, that this market will come and take out this liquidity or both, and then find its way down. Or wipe this, and actually wipe up this and find its way down. So you don't so much get excited, the market is just going up. You want to look at the previous time. This is perhaps a very long time days and this other one. So now, the worst thing most of us do in support and resistance point, now somebody just say, okay, this is resistance. Our market just get here, you short the market and put stop loss above here. It is said to be by smart money traders that they know that retail traders must have short because they felt this is resistance zone. For instance, that what they do is that they got here and say, oh, market is going to go down, and then they short the market, perhaps, and having short the market, that they put their stop loss above this previous high, and of course, targeting to make profit down, right? So this is what they do. Perhaps maybe to this point or back to this point. And they want to even make judgment that look at the other time, they failed from here. But unfortunately, that what they have failed to understand is that the market, three things that happen at the resistance zone. Now, this was a sharp one, very fantastic. But why sharp one? Approaching it was already getting slower, and eventually we can say this was a temporary resistance, and it took out that liquidity before selling down, which is a sign that the market was going down, right? Now, this actually got and did that, and the next thing, it broke this and then was selling down, which highly engulfing. But it took another move again. So now that the market could do a new, that the institutional traders are aware that liquidity is lying down here, liquidity is lying down here, that the market could just open. For instance, especially in a trading session, maybe London session or New York session. So the market will just push up with a very fantastic institutional candle and grab everything, and everybody's excited that, oh, the market is bullish now. And then what happened? A long candle liquidate out everything and return back to the zone. Returning back to the zone, probably some people who are conservative trader, they want to wait for the low that created that high to be taken. And that they refer to it as market structure shift. So when he grab that and return and break that low, then they now say, okay, we are waiting. The waiting they are waiting is that the next pullback, returning back to that low, get rejected, is they are shorting. And so you will see them now short maybe from here and targeting all the swing here. Because why are they targeting all this swing low, this swing low, this swing low, this swing low? That because these are liquidity area. That so the market could likely get there and do what? When the market get down here, it could now grab the liquidity and bounce. That because market move from one liquidity zone to another. So market is attracted, it's like a magnet. Just like what we say, moving from one order block to another. So the market could grab those liquidity and then continue to sell. And that's what it targets. So second thing is that the market could get to resistance point and have a sharp rejection. And it's on that point, when you have a sharp rejection, you will say that the market has formed a double top or a double bottom. Now, that is what they call the M pattern, a double top and a double bottom. So if it's from the support zone, then that's a double bottom, which is W pattern. And then if it's from the up, that is the M pattern, which is the double top, the M pattern. Now, for conservative traders, what they do, for instance, if you look at this market now, let's say this market actually get rejected from here. So let's look at it. If this market get rejected from here, okay, now that means that's form an M pattern. For conservative trader, they want that rejection happen and break this, which is still in consonant with when you say you want the low that created the high to be grabbed. So they wait for the market to form an M pattern and come down and break this. Now, when they break this, this is what they now refer to as what they call neckline. Now, breaking this, then the next pullback, that is, they say he broke it and retested it, is they are selling. That because it could break it and just do that, it return back to grab the liquidity and continue. So it's on that note, you can see that smart money concept traders are highly conservative in their trading strategy. So for me, gold, should I long? Now, when should you long gold? If you were not in, you can see I was buy, selling, all of that. If you didn't long gold, for instance, you didn't long gold here, right, and all of that. So what should you do? You are waiting for this to break out at this point. When there's a breakout here and retest, that means all this resistance, this point, this point, this point, that were resistant before has been flipped in to become a support. And that's where they talk about breaker block. So that these are other blocks that the market actually got to. Okay, so most time people come around to check and say, okay, I'm just going to get to the market. No, markets are not gotten into irrationally. You must, as a matter of fact, check the modality of what's happening in the market before you jump in. And those are the things, irrespective of either you just want to buy a coin and hold, either you want to do a normal day trader and all of that, you have to check all of those futures. Now, so let's quickly do those things we just explained on the chart, okay? Let's quickly do that. So most time, sorry, just a moment. Okay. Yes, let's go here. So there are a few things I've just explained, and I say something very importantly. Let me use BNB or Bitcoin or even the gold itself as an example. You can see what I was explaining previously is what is happening here. You can see the chart. So sometimes some persons, after they just saw this beautiful engulfing candle, they now, the candle have not even closed. At the middle of when the thing was engulfing, they short the market, believing that the market is actually returning down, right? And then all of a sudden the market, because there are checklists you didn't obey, all right? So when it has to do with trading or even buying coin to hold and all of that, you want to buy at the appropriate time, not just buy at the wrong time. And then now there's another level of discipline we always beg people to get involved in. And what's that discipline? The discipline of, especially if you're a trader, you're a day trader, all right, there's what we call discipline of one instrument per time. Remember what we said here? Power of DCA, power of one reward ratio, power of five fingers in the radar. That's five instruments that you are viewing to trade. Power of one instrument per trading session. Power of 1D, 4 hours, 1 hour, and all of that. So what are all these things for? Okay, you can see the gold now is moving massively, right? So, but people who are scalping, this is 1 hour time frame. People who are scalping will have made a lot of money. How do I know? If you come down to like 5 minutes, you will have find an entry. You will have found an entry instead of, but you are still conscious. Look at it. This is 5 minute time frame. So all this while you're waiting, that engulfing candle you saw was this. So a scalper must be careful though and know what he's doing per time. But at the end of the day, especially when it has to do with gold and some other commodity, Bitcoin and all of that, you can scalp them and make money while waiting for major move. But you must understand what is the move like. So imagine at this point, I talk about support and resistance strategy to trade. Even though you are targeting the support and resistance strategy to trade. Okay, look at this guy now. For somebody who is scalping, will have entered and trade here. So this thing that's coming down here, you expect it probably to grab this liquidity and start returning up. But if you return up or here, these are liquidity. So if you grab all of this liquidity and still did not return, then it will break down. But when you grab all of this liquidity and return, then you expect it to come here and probably break and continue the journey or actually fail entirely. Now, I talked about the top-down analysis that we talked about is very simple. Now, this is BNB, for instance. So let me take this BNB as a practical example, or any instrument at all, even gold or whichever one as a practical example. See gold? Come on. This is daily time frame, and you saw what gold has been doing consistently since December 19, gold has been on the consistent rise. This is the importance of viewing market in a long time on a higher time frame so that you can see the bigger picture and don't get carried away by just the immediate move, as it were. So you can see gold have been moving since December. And this is how I say I invest either on any currency and all that. This is about 340 pips or so. All right. Excuse me. So let's go to BNB because I think I have a long position on BNB. Now, this is BNB, for instance. At a point, market can get you confused. You get it? This is daily time frame. Now, what do I actually do? Most time, I told you you want to do a key level kind of drawing. And so what I do with that is very simple. I actually go to my, to turn it to a line chart. And of course, I want to remove some of those things that are there, but nevertheless, don't bother. So what I do is to pick my horizontal line, right? And I pick my horizontal line and I want to draw to see some important level that the market has reacted to. So perhaps I could just get to this one here as the bottom, right? And then I probably want to see another key level here. Let's say this one. So this is a key level, right? And then let's say we take another one. This should be another key level. So you look at the touch point, and of course, so this, you just get confused, right? The kind of structure it created was a very bad one, right? So, but this is where you get it more complex. Now, why do you get it more complex? So let's look at an area of importance that is more important for us. Let's pick here. Now, the point I'm trying to make here is that key levels. Now, market structure is very, very important. And remember what we said, that when you go on daily time frame, what you are practically looking for, are key levels. You get it? So now this is BNB. I've gotten the key level. So I will return the chart, the candle to the candlestick. Can you see now? Now, so we have gotten key level for this guy. So we have gotten key level for this guy, which is very simple for me. Now, if I've gotten key level for this guy, this is daily time frame, and I've marked all this my points. And I said, okay, 4 hours is very important for me. I want to go to 4 hours to actually see the trend, right? Now, and if you can't view the trend of the market very well on 4 hours, you can go to 1 hour. So that can give you, but take note of something. Every good trend you find on 4 hours, either an uptrend or a downtrend on 4 hours, then you are going to go to 15 minutes to actually find an entry for that. Meaning that, so 15-minute time frame is actually trading on intraday. Okay, so if I convert this now, can I actually get something? Okay, so now probably I want to go to 1 hour to see a proper market structure. Now I'm on 1 hour. Here is 1 hour. So let's look at it. So if I go by immediate time now, this is about 3 days time interval. Okay, there's something I also have done here. So when we talk about the market structure now, we say presence of high and low is what defines the structure of the market. Presence of high and low is what defines the structure of the market. All right. And I've been talking about this for a very long time. In fact, if there are two major things that any successful business person in the digital space that is trading, either you are trading forex, crypto, synthetics, and all of that. I'm going to go around some of those environments so that you can see what I'm doing here. Irrespective of what you trade, you want to find a trend. Irrespective of what you trade, you want to see price action, all right? And irrespective of what you trade, you want to get volume. Now, we now said market structure is the presence of high and low. And then the multiple of it is now a higher high, higher low, or a lower high and lower low. Guess what? Now, here is, I take this trend line. I will pick from here and get down to this point, perhaps. And I pick from here again, probably here, and get down to this point, perhaps. Now, this is 1 hour time frame. Okay. Now, if you look at another one I will do here, I pick from here, get to this point, and I pick from here. Okay. So pick from here, get to this point. Okay, perhaps you may not understand what I'm doing. Now, you see this one I pick and it's moved here. That is sideways movement. All right, so the trend is sideways, which they call range bound. The market was ranging. You can see it move up, came down, it move up. Then, so let me take off this. And I always tell there's a style to trade range band. But as a beginner, I always tell beginner, don't trade range band unnecessarily. Look for a trending market. And that's why I recommend about 5 fingers. And what's the health essence of 5 fingers? If 5 fingers means I'm going to keep just 5 instruments in my radar. Maybe Euro USD, GBP USD, GBP JBY, Euro SND, and USD CHF. Maybe an example. Then for those of us who trade commodity, maybe NAS 100, US 30, gold, and US oil. These are the 5 indices I trade: US 30, NAS 100, gold, and oil. Now, sometimes I trade if I have time just to look at silver, but it's not regular. So these are the 5 fingers I have in indices. US 30, NAS 100, right? Gold, that is XAU, right? And then what? And oil. These are the 5 indices, which are commodities I trade. Now, if you want to now trade, maybe you are trading future trading, so which is using crypto now to trade, you are looking at Bitcoin, Ethereum, right? BNB, Solana, maybe Avas, depending. Or you can just find beautiful altcoins like Uni token, right? Sui, Chainlink, Avas, Doge. Just like that, just trying to, because as a trader, there's nothing concern you about the name of coin. What you are looking for as a trader is volume, and let it give you a structure. Now, so let's go this way. If I go this way, let me extend this one out this way. If I go this way, right? So the beautiful thing I've just done here is that I've drawn a channel. And this channel too can still be drawn this way. Look at it. Look at, well, this that's a parallel channel. So I can take like this. Okay, I can extend it down. Okay, so now what has happened is this. This was a high, the last high that was higher than this. Okay, now this is a low. So now what happened is this. This is a high and it went down. It was this or these are down. You see all this one, they are still structure, but we refer to them as internal structure. These are internal structure. Okay, just understand it. These are what? Internal structure. But the real structure you are checking now is the external structure on 1 hour time frame. By the time you go to 15-minute or 5-minute time frame, you're going to see this internal structure come to play. And so most time people trade and work within the internal structure and forget the external structure. So when the market exceed your target of that internal structure, is because you do not pay attention to the external structure. So listen, the external structure of 5 minutes is 1 hour. So you can take note of this. The external structure of 5 minutes is 1 hour. The external structure of 15 minutes is 4 hours. So that is to say 4 hours structure have an internal structure of 15 minutes. 1 hour structure have an internal structure of 5 minutes. Are you getting it now? Then 15-minute structure, right? 15-minute structure have an internal structure of 1 minute. So 5-minute structure have an internal structure of in seconds. So you can understand that. Okay. So basically, so you have seen that this was a high and this was a low. Now, this is where most people get it wrong. When you are drawing, why do I need to know how the structure is? Because there's a tool called Fibonacci retracement. If you cannot get appropriate swings in accordance with the setting, you are going to miss a lot. So now, if you look at this, can you see? This is not a low. This is not a low. Now, so this is a low. And here, this is a high. And here, this is a low. This is a high. This is a low. Now, this is a high. Now, ordinarily, okay, so let's stop here. So, this is higher than this. This is low, and this is lower than this. So, in downtrend, you have a higher high, a lower low. So, that means presence of lower high and lower low is downtrend. While the uptrend is presence of higher high and higher low is uptrend. So the opposite is just the reverse you are doing. All right, does that make sense? So if that is the case, you have this is 1 hour time frame. Now, so now the market is actually trying to break, but ordinarily you should consider this guy returning back when it break this high. Because this is a low, this is the lowest, this is the high that gave birth to this low. All right, this is a high that gave birth to this low, and this one is moving right now but has not broken this. So whatever thing you are doing here is not only the market structure that I'm confluence here now. There are two things that you see here. There is a key level you drew here before. That means this is an area of importance. So the market, this place that may be, is going to turn out to be like a demand zone eventually, maybe on your 5-minute or 15-minute. So the market is actually dialing here. So you expect the market to continue and actually break this. So you are marking those lines. So understanding the market structure will help you so much that you'll be able to be in charge of your trade. Okay? So now look at the gold we're talking about, right? So the gold is actually still pushing. And so imagine for somebody who have short gold just because he saw this and the market pushed back, he will say it's village people. That's not true because you are not patient to follow all of those checklists before you take action. So for me, you ask me, Felix, if you are not in this trade before, perhaps maybe like here or even here, why will you want to enter long here? And why will you want to enter short here? There are conditions that are meant to be met, that break out and retest, or fake out and return, which is called liquidity grab and return. And of course, you want it to break the previous structure. Though this is 1 hour, but you want to see this reaction before you go to a lower time frame and take your action perhaps on 5 minutes, right? So you can see now that this market, so if you're on your 5 minutes, you will have been able to scalp anyway, all right? Because that long candle you saw, you will have been able to find an entry, which are part of the thing I'm teaching to say, if you want to trade, day trader and all of that, use support and resistance strategy. And we said support and resistance appear at every time frame. Demand zone does not appear at every time zone. Remember, we're talking about, I'm not detailed on this training. I'm only going to be detailed when I'm going to be doing more of that for people on private mentorship or be with me and all of that. So, but if you understand this concept, you can take it to go and you can see a lot of videos online to study about them. But you have to be very careful because when you are going to be left astray, you wouldn't understand. Remember, enemy of knowledge is equally knowledge. But if there are vital things you need to understand the market, you see top-down analysis, which is the key levels, and understand daily bias, price action, candlestick, and chart pattern. What are, some chart pattern or candlestick that predict a kind of potential reversal, potential bearish reversal or bullish reversal, potential continuation, and all the like. They are very important for you to understand. Some of them is only most reoccurring type. Then the market structure is very, very important. We said market structure has to do with high and low, and then trend is the structure that will show you either you are in an uptrend or a downtrend or sideways. So the pattern and strategy you use in trading sideways will be different from what you use in trading a trend. Okay. Then demand and supply zone. These are major key levels, right? Almost just like, but demand and supply zone can happen on 1 hour, 4 hours, and all of that. But key levels are more important from daily time frame and above. Okay. So then so demand and supply zone can happen in less than 1 day. 4 hours, you can have demand and supply. 1 hour, you can have demand and supply. So demand and supply zone are very important. Then you have support and resistance. Now, support and resistance can happen on any time frame. So that's what you need to understand. That is a stop. So demand as so we talked about support and resistance can do with what we call an impulsive move and a correction. Impulsive corrective, then you find support and resistance. Then then liquidity can happen mostly. The liquidity can be everywhere, but the 15-minute liquidity are very, very good because they are major, into gapping for 1 minute entry point or whatever, or even 5 minutes. So liquidity, that is an area of aggressive selling or buying. Okay. So anywhere can be support and resistance, but liquidity can be a point at which there's what we call major support and resistance where people actually place order to buy or to sell. Okay, you can see now, see this guy, I'm on a trade in this guy. Okay, I'm on a trade on this guy. You can see now it's just going up. And what made me to enter trade on that guy? Because of this key level. Do you understand? And so you are expecting that this guy, you are going to envisage a potential resistance here, or stop, or a pause. Now, but if it's aggressive with enough volume, what you can now see is that it will break out this. That means ultimately this is a liquidity zone. This is a liquidity. This is a liquidity. So targeting, right? Targeting, this is a key level. But ultimately, your point of importance should be more of, if grab all of this, it can jump up to this key level. That is $696. Now, let me check. There's a trade that entered there on my Prime XBT. I want to see maybe the trade. And this is what I call the power of DCA. Now, if I was in the market, I will have DCA. And so when I talk about the power of DCA, and I still talk about power, okay, you can see the entry. Okay, the trade is actually giving me just $6 profit. Because I enter one position. So this is an exchange I use. What do they call it? The spread is very, very fantastic. So I trade both future and forex here. Yes, you can see now. It's one jump shop. You can see I'm on $7 profit. So if I close it, I will make money. Yes. If I close it, I will make money. So let me go to what's time frame. This 15 minutes. Let me go to 1 hour. Probably let me see. Maybe I'll see where I put the take profit or something. Okay, I think I'll have to find another way to see it. Okay, so 1 hour. So you can see these are liquidity. Okay, it's approaching this liquidity. These are liquidity, but ultimately, so approaching those liquidity and all of that. Okay, so if you look at it here, let's see horizontal line. I think, do you have? Okay, so this should be like ultimate target $680. Uh-oh. So that region, because you have similar thing when there was a stoppage here. So if we extend it out now, so you can forecast out so that, okay, the market should get here. So let's go back to 15 minutes. Then you will have seen different liquidity zone, which are all of those points. So now what I'm saying is this, very simple for trade, is that, okay, so look at what we're saying, as it were, right? I think I'd even find it more fantastic to trade some coins trading some coins in Forex, right? Trading some coins in Forex, right? Trading some coins in Forex inside that place. I think there was another one, oil, that was telling people that they could still buy oil. Let's go. So oil is one of my favorite trading instrument, right from the one, and it does not rush. So you can see when I say people could still buy oil, or look at it on 1 hour time frame. So you can see that oil that I'm targeting and all of that. So if you go back to, okay, sorry. Okay, so in a nutshell, you expect this. So now, one of the other major discipline that I always encourage people to embark by is that market have its own kind of thing. So your level of discipline is this. The less guesswork you do, the more disciplined you can be. Hear me that? The less guesswork you do, the more disciplined and confident you can be. Now, and of course, you won't be too emotional. Now, why don't you get too much emotional? Because when you are confident in what you are doing, and when we say person is confident of what he's doing, does not mean that he will not lose. He is aware that chances are there that he will lose, but he wants to win. So he's targeting the winning. However, he's aware that he could lose. This is very important. And that will take us back to this point here. Yes, what take us back to this point here. This point, part of 5 fingers in the radar, and the power of 1 instrument per trading session. So let's say maybe when I enter this market at London session, I'm only monitoring this trade. Because if you are, I can't imagine where you want to sneeze your nose and at the same time whistling. So I want to target this trade more, right? And when I'm targeting this trade more, I want to add more position, assuming I was there. And that's the part of what? DCA. And then 1 risk reward ratio. Now, if you go back there now, see what's going to happen. You have marked this, oh, this market is trying to change a trend. Then you will have find a proper entry, even maybe when it comes here, or you will have even traded to this point. Remember, this is your key level. Now, let's go down to 15 minutes. You will see something different now. In 15-minute time frame, even though the internal structure of 1 hour is 5 minutes, so now, but this is internal structure of 4 hours. In 15-minute time frame, what did you see? The market that was moving in this place. Have you seen it now? Inside this channel. This was a high, and then this is a low, this is a high, this is a low, this is a high, this is a low, this is a high, okay? This is a low, and then a high, but never got here. So you can't call it high to the external structure. Internally, a structure had been created because this is a low and this is a high, and then this one pull back and never got back to this point and move up again. Now it created another high here, and this is another low, right? This is another high, this is another low. So meaning that this market is shifting. So ordinarily, if you go to 5 minutes, you will have found an entry. But of course, even the 5 minute and the 15 minute almost looking similar right now here. Okay. So, but most time, this market is highly choppy, and that's what you are seeing this happening now. If it were a very fantastic trend, you won't see all of those choppy movements. So when you get confused so much in the 5 minutes, then 15 minutes can do your work for you. And that means, for me, that I find this a great move here and stop here. So that means this is what the SMC trader call market structure shift. What happened? This is a low. And so let's quickly do the same thing we did now. By 15-minute market structure, this is an uptrend. You understand that? Because you are going to have what they call counter trend line. Okay? You are going to have what we call what? Counter trend line. So if I have counter trend line, very simple. This guy, this is the lowest, so I mark it out. And now this support and resistance trading strategy I told you, I use what we call, just like, so the last longest candle and the wick to the body of that candle is where I mark here. Now, this is my support. Okay, now I want to enter trade ordinarily. And the part of following one instrument per time is very, very crucial. Now, this is a support. Now, we said three things happen at the support level. Now, at this support, some of us, because this creates a support here, this is a low, remember? This was a low, this was a high, and the next low that was created was this. Aggressive, very nice. And now what happened? The low now stopped. So this low stopped. Imagine, now if you're a scalper, you will have traded here. And how will you have traded here? Remember, I say every impulsive move and corrections, which is corrective, it's a potential entry. See what you will have entered here. And because you already understand that the market have drawn a channel here, see where you have entered here. Here, you have marked this wick. I'm sure somebody is following, even though it's not internal structure. But at this point, it's a potential support. And I've told you support and resistance can be found at any time frame. It doesn't matter which time frame. Now, if that is the case, this is a support. Three things happen at the support level, and which you must always understand when you are marking your support. Three things happen at the support level. Number one, the price return back to that support and create a double bottom, because we are talking of support now. It will create a what? A double bottom. So if double bottom is created, okay? If double bottom is created, where's this one? So if double bottom is created, you now want to enter trade at the break of neckline, which is what you are seeing, for instance, here. So when you break the neckline, the retest is your entry. That's one. Two, the market had created a support. So you expect the price to return and grab liquidity that was behind here and move. That's the second one. Did it really happen? Yes. Look at the candle that initiated that and immediately returned back above this your line. Now, the next opening candle is your entry, which is this. Now, this is a sniper entry traders. And sometimes when you cannot find it easily, you go to 1 minute. So I'm not going to go to those details here, right? If I go to those details, it's going to be too technical for you to understand. So if that has happened, that means this is where we call the risk-reward ratio. Here, you have found an entry here, and your stop loss is below this, your immediate swing low, which is this one. Now, remember what we said about the power of 1:2 risk-reward. So if that is the case, 1:2, let's draw this. It's already 2 here. It's already 2 here. 1:2. And you, because you are dynamic as human being, you are not robot. Now, your dynamics is going to create something for you because you understand what you are doing. And what's your dynamics? Even if I've marked my risk to risk reward ratio, which means, for instance, maybe I enter 2 positions. One is going to be under my 1:2. Second is going to be the next resistance, which I'm going to be targeting even this high. Or if I do such a channel like this, that means I'll be targeting to the wall of the channel. Do you get it? And so if that happens, then by the time the first take profit is taken, I want to adjust the stop loss above the entry point. And now what you have, the market has jumped up and then hit up here. So this is going to give you 1:3 point something risk reward ratio. You heard me right. Now, this is because you are using support and resistance. But however, you understand the trend of the market. You are not ignorant of the, the devices of the crafty. So, but the point is that you have already defined your routine. Now, what happened? Another trade come up here. But imagine you were jumping around different instruments. You won't be able to see this thing. Now, you have entered this and it has given you a profit. Maybe you are using just 1 hour or 2 hours for the day, for the period to trade. And so you have been doing all of this. So here, the market now come up here. See, what do? I use my support again, or resistance. This is a resistance. I draw this. The wick of the candle, I extend it out. So we have said the third thing that happened at the support or resistance zone is that we said, number one, the market react and have a sharp rejection, which will create that double top or double bottom, number one. Number two, the market get to that point and grab liquidity, which is a very fantastic one. It will give you an entry point earlier. Number three, the market get there and failed. We call it failed rally. So, and even me as a trader, I always explain something called I call something the reversal pattern, either simple 1, 2, 3 reversal or multiple weeks. What are multiple weeks? Now, this market was going down very fantastic, and here it start having multiple weeks from the direction it was heading to. That's a potential pullback, and that was what pulled this back. He now got here, instead to be aggressive, to want to grab liquidity or to just have a sharp rejection here, he start creating multiple weeks. It's a signs of weakness. And so with that, and of course, you have marked this. It didn't get there. Probably this, the second candle. Now, this is the thing, very important. When you are doing this, you don't need to entertain unnecessary fear. Remember, we said it's either you lose or you profit. So now, 2, 3 candles had created that multiple weeks. Probably you even failed to enter on time. Maybe this you now will also entry. But the earlier you're about to enter, the better your stop loss reduced. So, but you are always afraid. Okay, this is even 15 minutes. Oh, I didn't even know. This is even 15 minutes. Assuming this is even 1 minute, your stop loss will be more even minimal. So double 2 times kind weakness in 15 minutes should give you a signs of damage. This market is down, taking another dimension. So here you are shorting the market, and then your stop loss is above your previous high, which about 0.7 something percent does. Remember your risk reward ratio, 1:2. This is 2 already here. So your 2 is already here. Another style trade, remember the market is on downtrend. So that means on the downtrend, I'll be targeting this swing low ordinarily. Okay, this is another dimension, but don't go that. Always apply your 1:2 risk reward. So it's like I'm complicating issues for you because more advanced that we look at the left-hand side and to see the previous swing low or swing high. So for me, I will target my previous swing low or swing high. Okay? So when I target that, that's going to give me 1:2.9 or even 1:3, as it were. Then, secondly, the market is now doing what it's doing. You know why you're targeting this? Market could get there and now reject and start bouncing back. Second, to get there, grab the liquidity and start bouncing back. And that's why you take profit. So remember, I said I always do like 2 or 3 position entry. So if I'm on 2 or 3 position entry, so what will have happened here? Very simple. Now, this number 1 will have taken the profit in 1:2 ratio. This number 2 will have taken this. The third one, I won't open any take profit. What happened? Even if I open and take profit, once the first one is taken, the second one, you adjust your stop loss below your entry. And then once you adjust your stop loss below your entry, then you now trail the profit again down more, as it were. So you can see now why focusing one instrument per time is crucial, is key. It's very, very important. If not, you will just be gallivanting here and there. That's why you record some loss. You cannot account how the loss come about. It's very, very important. Now, so imagine for anyone who is trailing it, that will have been 1:5. So you don't focus 1:5 just because you enter the market, but because I drew a channel, that should give you an idea to that, okay, to the wall of the channel, you're another take profit there. Have you seen now that your trading is not anyhow, it's meticulous. So why we see anyhow is because we do anyhow. And you stand by that instrument. Let it get you to a level where it failed. Then you know that you have failed. No problem. Then, oh, this one is like it's going to fail me. Let me better look for another one. You will not be able to manage them. It's a very big problem. It's a big concern for most of us. Now the market has got in here and down bounce. Somebody will say, oh, I will have found an entry here. No, you can't find an entry here because you don't know what the market want to do. Perhaps the market had stopped here and start moving up. You say, I will have entered here. No, 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 no. There was no justification of your entry here. However, for people who drill channel, for instance, may say, yes, I have justification because I want to trade it from channel to channel. Some person do like that. So that means you wouldn't find an entry here. That means you are only shorting here. And when you get here, you are longing here. This is like you create a Bollinger Band. So that means you will have long here. Can you see another fashion to it? But how many people know how to draw the channel? And how many people will remember to even draw a channel? It's very, very important. Okay? Now, so you can see trading. If you go back to that thing that was on 7% profit that time, I will have been minus now. Now, see, let me tell you, this is the importance of DCA. Don't open one fat position. Open multiple position with small lot size or small leverage in case of future trading. Don't open one big lot size or one big, especially if you are following to build your account. Open many position with small lot size. Open many position with small leverage. Now, with that, you will have seen that maybe if I open like 3 positions, those $7, I will have closed 1 or 2. By closing 1 or 2, I've secured some money. If eventually the third one will fail, I will still be in profit because the first and second one are giving me some profit. I hope somebody is learning something. Now, because you could see what BNB is doing, is just struggling again, a return back. And if you go to that, our trade, you are going to see we are in negative now. Let's do that. Can you see? Okay, exactly. We're in $7 plus profit. We are now back to $7 negative. Remember, it's actually very dangerous now the way I'm looking at this guy, because this is a massive jump up. Of course, we didn't even mark that point. And then it's like grabbing a liquidity and returning. So this guy may actually return again to probably want to get this is liquidity before buying. So you can see when I said if you are trading, so if you go to 5 minutes, you probably will have seen this thing very well. Okay, can you see that? Can you see that? So you can see the guy had actually failed, and then there's there's a liquidity here. So there's a liquidity here. There is a liquidity here. Okay, so when you are trading, your mind is calculating a lot of things. Now, what will make me to say, okay, let's see what happened to this guy. It returned back again to what? To this key level. And so we could have a bounce from the key level, or if you break it, that's going to be very bad. All right. So now, for person who have done this channel, could be trading from channel to channel. So that means he has entered here and target to take profit here. That person must have been a genius and must have been a very highly disciplined person for him to have been able to do that, because you can't remember everything all the time. So the market broke out and returned back to the channel. So probably this is your entry candle or this one. Now, if you take that here, okay, to this point, that means you are going to be doing about 1:2.3 risk reward ratio. Okay, perhaps, sorry, let's go this way. So your stop loss should not be as wide as that, just below the swing low and all of that. That will have been 1:3.25, thereabout. Are you getting it now? And that's why trading one instrument per time until it give you what you want from it. You don't jump around other instrument. Can you see now? It had gotten to the key level. Let's see the reaction. Now, this is weak. then you want to see another candle form, perhaps, this is but if you are just gallivanting here and there, even if you spot, you want to find an appropriate entry point before you actually pull your trigger, right? So that's how we actually define all of these support and resistance. Okay, you mark it. So for instance, here, but because here, I've drawn a kind of counter trend line. So even if you fail to this point, you are looking to the counter trend line and all of that, which is going to almost in consonance with this and all of that. And if you look at it, simple thing, let's look at it. This is a high, and this is a low, this is a high, and this is a low. Yeah, this is a high, okay? And this is another low. Fine. Higher than this one higher than this. Okay? This is another high. Okay. What was 1, 2, 3? Yeah. So it's getting bad, right? It's getting very bad. So got this impulsive move because we have not broken this. So it's very getting bad. So let's see how this maybe practically come back here. But as far as it has not taken out this and all of that. But you could be entertaining unnecessary fear because you do not know what will happen, and then you just guesswork to jump into the market. And that's why we encourage people not to do that. So you can see gold. Okay, this is 15 minutes. So I say if you go to 1 hour to be able to see proper order block, and then you can now, so reaction from this point now, okay? So we're waiting, I say, at this point, looking at gold from the demand zone, which can form buy side liquidity. And now, so if all this point is rejected, maybe forming a double top, so you want to return back to this point. Yeah. Okay. So if this begin to form a reaction, fail to move, and all of that. So when you go to your, 15 minutes, you want to see a lot of reaction, engulfing candle, and all of that, then that would make a lot of sense for you. So, but conservative trader don't just jump in because this is an uptrend market. This is a bullish market. So finding a way to sell without a proper measurement can be very, very terrible for your health. Okay, so you can see this guy is breaking down. So say the only hope here, or probably return back to this channel before it bounce. But if you go back to our money now, we have lost so much money, maybe $9 or $10, okay, $8. And this is the money you will have grabbed into your pocket, and then you'll be fine. Okay, so that's for this guy. So oil, okay, oil is still doing what it's doing. Okay, oil too have gotten to an important point. Yeah, so let's look at it. 1 hour. So if I ask you now, why is oil reacting here? Very simple. See why oil is reacting there. See why oil is reacting where it is down and I've not been able to move. Here is the cause of oil reaction. So when you are buying into a position, you are looking up. For instance, when you bought here, see where you are looking at again, and it actually reacted, pull back, right? And in consonant with this pullback before making a move. So this pullback now is happening maybe for a while, or can even return back to this point, right? Or, and then before breaking to finally hit up here and all of that. So, but for someone who have been in, maybe since yesterday and all of that, you are in money. So if you go to 15 minutes, okay, so you can see on 15 minutes, there is a supply zone there, right? That's where it's reacting. So you can pull back to create just the type of pullback before breaking it and all the like. Okay. Yeah, so please, ladies and gentlemen, doing all of these for to whom it may concern, because one thing I find out is that most people don't like knowledge. And the secret of this space is knowledge. Remember, what we are trading is information. So the hardest currency of this season is information. So you have to work on yourself strategically to know basic thing what to do and what to form your decision and all of that. Oh, wow. This guy broke down massively. So this is 15 minutes. So it has returned back to demand zone. I haven't moved up so much. So you want to find what happened next to this guy. Now, there is another thing very quickly I want you to know. If you are part of our internal group, you know we talk about fluid trade, okay? So we have what help us to mark our demand and supply zone so that you don't stress yourself unnecessarily. But this is a sign of weakness for this guy, right? This was a high, right? This was a high, and this become a lower high. This one are internal structure. Now, but this point is this: there was so much liquidity over down here as the market come. Now it has finished packing the liquidity. Where else should it go? So the market should be bouncing. That's what we expect, right? But when it bounces, you need to actually cross this, be able to cross this. All right. So you can be trading, especially when the market becomes somehow very funny, and it can create a very choppy activities or movement, and then you will be just confused on what to do. So if you go to 5 minutes sometime, right? To go to 5 minutes, you can see. Now, why 5 minutes? 5 minutes give you opportunity to find a trade easy and take profit even before anything. So by that, if you're 5 minutes, you probably will have found an entry. This is a support, a resistance. Look at this 5 minutes. I know many people will not see this thing on time. The market has moved here. Look at it. And then you will find a potential resistance right here. What happened? The market came back and grabbed it. And so after grabbing it, and then these are the engulfing candle from demand zone. And now the market returned to test the demand zone, which they can call bearish order block, and then continue to sell. So that means you're selling. Yeah. So your selling will have been here, right? Your stop loss here. Your risk reward ratio 1.1:2. So 1:2, that will have been how many pips? That will have been 8 pips, okay? That will have been 8 pips. So to lose 4 pips and get 8 pips. Now, for another person to, we look at it, every liquidity before demand zone, market likely to grab them. So when you were selling down from here, liquidity, 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 until you finish everything. And it actually did. Finish up everything. Now it's time to go up. And so sometimes I don't need to go too much advanced. Now liquidity is grabbed. So you want to look at from the demand zone. So you want to find an entry because liquidity is grabbed, for instance. Now this candle didn't really engulf. So perhaps for sniper entry traders, so if I'm entering from here, for instance, now, so I could do this and then target the bearish order block. And then your stop loss will be here. Okay? So your stop loss will be here. Why? Because you got on the demand zone and because you have seen that the liquidity don't grab. Now, please, this is just a scalping. Before I scalp, I normally first to check the bias of that particular instrument for the day before you go ahead on this. If not, you may just be doing things and then be causing a lot of issues for yourself, okay? So, for instance, let's go to this place. Okay, you can see gold now, the reaction is getting more intense. So that was, what do we check now? It's, okay, it was Euro USD. Okay, Euro USD. What time frame is this? 5 minutes. So I remember I say, let me buy. So let me just buy the market price and I will do all the settings I want to do. Okay, I bought Euro USD now. And now see what I want to do. Let's go to Euro USD. So I'm in negative. So check, remember we said, so this is 10 supposed to be a downtrend. I told you, I said, when you are below 200 moving average, you want to be looking for a selling opportunity. Now we are bought. So if I just want to be scalping, I can target this or this low. and then to take my profit. But I can set my take profit back to where the market was coming from, however, but I can always close it as I like. You get it? So that means I'm targeting 1.04597, stuff like that. And my stop loss below this point. Remember? So that means, so that is what we're doing is this, long with long at this point, and our stop loss below here. So if we are working on 1:2 risk reward, so 1:2 risk reward will be 1.04553, and stop loss 1.04331. So let's go. So I'm going to click to edit that. So take profit 1.4, so 1.455553, and it says we're going to make $7. So 1.4, yeah, 331. We're going to lose 3 point something dollars. So that's 1:2 risk reward. So you place it, and then, so you can see we're in 20 cents or 20 something cent on profit, right? Then we're about, okay, 0.5, that's 5 cents, 10 cents, and all of that. So take profit here. So this is 1:2 risk reward. And then you just allow it to be. You have known how much you're going to lose if the market go against you. And you have known how much you're going to make if the market go in your favor. So you can see, we couldn't enter on time because while I was trying to do this analysis. And now, so it's doing what it's doing. So you're just waiting. Allow your take profit, allow your stop loss to hit, and probably, all of that. So now that is following one instrument per time. Now, like I told you, you see oil. See why oil is doing what it's doing? Because I told you it got an area of importance. Can you see now? So multiple ways, correction. So, but this is a continued uptrend, but it has corrected. Sometimes we get down to this point. So you want it to actually down break this because it's an uptrend. You understand? Because it's an uptrend. Now, but if it refuse that, that means the correction is going to be massive. But that's why you trade from one point to another. So for instance, imagine if you are in oil from this point, yeah, if you are in oil from this demand zone, for instance, you'll have been in much money getting up to this. Let me take out this. I mark this point perhaps from a particular point here. But if I take my own off now, you will see that there's a supply zone there, and the market have gotten there. This is sharp rejection for this supply zone. So the only thing that probably could bounce it is for it to bounce away from here. But if it's going to break down here, that means you are looking at for you to come and mitigate this demand zone again. Okay? So this is what to do, to be profitable. Don't trade too many instruments at a go. Set your take profit and stop loss. Okay, gold has broken. I think gold, fantastic. Can you see now? So you can imagine for people who want to just blindly enter a short position for gold, and now gold, I'll change the narrative. Let's go back to this point, and you're going to see, okay, our profit is $1 already for Euro USD. So if you are a scalper who just likes small money, $1, you could close it, depending on what you are doing. All right, so, but I don't trade, yeah, what do they call it? Okay, look at this one that was in much profit because it has actually gone down. So let's look at it. Yeah, so let's look at, so Euro USD, if you jump in with me, so $10, $20, say $10, $1, you have made money and all of that. Okay. So look at the oil. That's US oil. We're in much profit. Now we're in negative. I told you that it had gotten to an area of importance. Can you see now? Can you see? So can you see now? So it returned back, probably maybe, okay, I was doing training. That's why, if not, why would I even enter the market on oil from this point? So you can see ordinarily. If those of you who are on AGGREGATOR in Forex, I always tell you, using of your 200 moving average is very fantastic, because every time the markets are above 200 moving average, you are looking for a buy, right? So all these things that oil return back here, this is your buy, this is another buy, this is another buy, just like that, right? No, so if you return back to this, it's like returning back to that my entry point. That's another buy for you, right? So, but if you look at it now, so the next thing we say is no, those in fact, for beginner, the very important aspect for you, if you can understand this support and resistance strategy, the very important aspect for you is to know how to interpret the MACD indicator. Yeah, it will help you to identify so many things. Come on, see oil. I say oil. See gold. Yeah. Now, this is a gold I've loved to trade every time I trade gold and all of that. Look at, oh my goodness. Let's check out what the gold has done now. Now, XAU. So what you need, oh my goodness. So what will have happened if you just jump in, the gold have gotten to resistance for that. I am selling. What are you selling? So let's go to 1 hour time frame. You're going to see, oh my God, gold is so violent right now. Come on. Violent. You know, I told you, I say gold is so, but now, for the fact that gold is violent, now, for anyone who is trading gold, so he actually find an entry? The answer is actually no. Oh, why not? Okay, although if you go to like 5 minutes, you probably will have found an entry. But look at it. The first candle that I took out of this point is what is still pushing now. But for anyone who was in gold before all of these things are happening, he has no problem. Now, remember, this was a temporal kind of, so you want gold. Now, this candle, this first one has closed. And of course, it has created another one. So you want this candle to actually pull back, perhaps onto this top of this support. So the next bullish candle is your entry. Oh, won't I miss out from the party? Don't jump into the market at the middle of nowhere. So you're not the part of the people that prepare the party. Why do you want to take the largest share of the party? After all, the best entry point that you will have been, that's why I say when we go to 5 minutes, you will have find fantastic entry for gold ordinarily. Because like now, this is even 15 minutes. So gold has actually pulled back here, even though you're now targeting to see how the breakout of this point. And eventually, you have made money, which you put a stop loss here, or take profit. Now, and then if you are trailing, look at it. Yeah, so you can see gold. So on your 5 minute, okay, so look at it. Those of you who say, let me enter, you want to let that candle actually close, right? So now, see this is a low, and this is a high, this is another low, this is a high, this is another low, right? And then this is another high, another low. So you will have been able to find at every impulsive move, after a correction, moving up. So you will have been in this market before this impulsive move. After this, now it has stopped to want to correct, or you watch to see this candle close. How is it going to go and all of that? So, you know, in the short while, you will have been closing some trade and all of that. I always tell us that you can always find money if you know what you are doing per time. Now, look at our trade. We're in $9 negative. Can you see what I said? Now, It's creating a pattern. So that means this liquidity was grabbed, it's not satisfied, it's still targeting this. This is how you are now in loss. You see money in your front because you were not planning, you are not strategic and all of that. You keep getting out of your hand. See this one. So $9 or $10 floating loss now. Another point you're looking at is here. Now, so when I tell most of us that the real people who are trading and making profit, they don't make noise because they sit down and meticulously following what they are doing. And that's what differentiates noisemaker from the real traders and all of that. Okay, so you can see this guy struggling now. So probably until you move up, you have picked your stop loss and take profit. So it shouldn't be your burden at all again. It's not your burden. You have said to take profit. Unless an exceptional case where probably you're on the trade and you want to look at maybe there's a fundamental information, news that's coming, and you probably want to check. So today, for instance, doing this training, is on the 19th or something. Yeah, 19th of February 2025. So are there fundamental news? Okay, President Trump speaks today. What other thing? Okay, that's the major news. Okay, FMOC meetings. Okay, so that means there is a very fundamental news coming today. So you want to wait. So guys can see massive move down, another liquidity to be grabbed, another liquidity. So if you check, the market have view up. Where are liquidity lying for me? I have left some liquidity behind. I need to collect them. Okay. So can you see the gold now? I'm sure somebody is learning. See gold. Can you just jump in because a candle just shoot out? No. Even this candle now has not closed. This is 5 minutes. It has not closed. Now, if it closes above that point and then got bullish candle now jump up, then you will now want to really see it very fascinating. Okay, another candle is open. If you are trading on 5 minutes, right? If you are trading on 15 minutes, you are still waiting for this candle to even close. Trading on 5 minutes, it has actually closed. Okay, it has actually closed. And then you just need a bullish candle from this guy, then to find an entry. Does that make sense? Okay, so oil is struggling, or the euro will just open. Okay, the euro will just open. You remember, so I told you it was giving us about how many profit, 1 point something dollars, and now it has pulled back again massively. All right. So if you're a scalper, you have no problem. Just use support and resistance, but understand the market in that 10 magic stuff so that you'll be in charge and not be under pressure. It's very, very important for us to pay attention and learn the things that works. And of course, things that affect our psychology, can work on them. Okay, so here is 5 minutes, right? Here is 5 minutes, right? So what you want this candle to become bullish, then you want to find an entry. Outside that, you got to be careful because, okay, you got to be careful. Okay, yeah, so it makes sense now. So after this close, this candle, if I look at it properly now, you see that it will have come down. So look at it. Gold can, any time frame can be used for gold. Remember I said internal structure of 15 minutes is 1 minute. So you see several activities. Then the next thing you want to add to ease your activities is called the MACD. So look at the MACD, go to 15 minutes, let's see what MACD is telling us. So ordinarily, with MACD, you will have been confident to find an entry, even though you are looking at this is a resistance ahead of you, fine. Then the market have created multiple wicks here, all right? And then, so even if you have ruled out this point as support, it bounced from there, and the MACD 2 is telling you, bros, we're going up. And then you will have find an entry and looking for to take profit here. And if that has happened, so let's look at it. Let's take our ruler. Yeah, take our ruler. Come on, that's about 10 pips as fast as possible. Then you have collected the money. And then, so if you have 2, 3 position open, one is still running, and then maybe 2 are closed, then you follow the trend because even your MACD is still very strengthened. If you go to 5 minutes, that's amazing. You will have seen. The only thing is that 5 minutes will have created too many fear for you, but you will have grabbed earlier too. So, but I think 15 minutes for people who don't have too much time for noise and all of that. You probably want to go there and so using your 15 minutes. But I'm just telling you that you can go with your 5 minutes and work out things and then still be very fine and all of that. Okay. So let's go to the BNB. You will see that the guy has really plumbed to. Okay, so that means what so look at your MACD too. Your MACD already crosses. Now, one of the things about MACD, probably I will not have time to explain in this video, is that when it crosses, but is the trend of the MACD still an uptrend or a downtrend? So with the time frame is an uptrend. So it can cross to make you to have a pullback and then recross back for the continuation, just like this cross, and then continuation, that's a pullback. Then, so most time people see a cross, but they don't know when to interpret it as a reversal entirely or just a pullback. That should be a lesson for another day, as it were. Okay, so yeah, let's see. If we go back to our negative that we were before now, so it's no longer $10. So that means this guy grabbed which liquidity was that. This is time frame. Okay, this so it's the negative is reduced. Now, this is what I say. Most people want to trade. You don't want to see red. You don't want to see a pullback. Sorry, it's your case. You have to see that. If you don't want to see it, you are going to mess up your trade. Trust me, you're going to mess up your trade because you will be under emotion. Okay, you can see gold continue right now. So because you have confirmed, and so even when you are using your this guy MACD on 15 minutes, it's still trending. And of course, if you look at the high here, still have a long way to go. All right. So maybe this week we'll say gold could hit that 3,000 targets. Maybe that's what it's working towards, as it were. All right. So it's so important, okay? So important. Even on 5 minutes, you see that these are just normal pullback, continuation, pullback, and all of that. So if I'm trading gold and I'm scalping it, I don't have time to start looking at other instruments because gold literally will give me everything I'm looking for. And so why do I need to start moving around other instruments, as it were? So gold should give you what you want. And then except and if you are finished with gold, you have traded and you have made a lot of money, and gold is no longer trending properly, then you can change course. That's one of the things that very important for us. So you can see when I talk about the trend line, and so and probably after the trend line, like I've told us, this is liquidity down here and all of that. Come back, grab them at the demand zone. But if you look at it on 5 minutes already, you are actually bearish. And that means if you are even using MACD, you will have scalped down this. But of course, I already saw that massive kind of move while we're there and all of that. So this space is very fantastic, but we need good level of discipline so that we don't misbehave unnecessarily. So this guy again is still struggling. Okay. Yes, it is 15 minutes. Still struggling. So that could just be a pullback because this is bearish already. Like I told you, this is high. This is lower than this. So, but you're still making money because you find that it has grabbed liquidity here. Then go to a 5 minutes. You're going to find out that this pullback. Yeah. So it'll be a pullback. It can be a crossover, and then, but you can make money. $2, $3, you can close and make money and all of that. So this is what help your flexibility. So you can see oil now. Okay, so I think it's almost done. If we go and check oil now, we're going to be negative of the profit we were before. No, but if you check let's check the Euro USD. Okay, yeah, Euro USD. Okay. Euro USD. Okay, 55 cents. Oh, are you supposed to be negative? Should we be network? Okay, I'm surprised anyway. So that is how to really be profitable, you need to be disciplined, have one instrument per time, working on your instrument per time, so that you can manage it as easy as possible. US or okay, so you can see now it actually came down to that entry. And so when you manage your trade, you will have been able to stack more position. Remember, I was telling you guys that this is a kind of basically support for it. Pull back to that point and you need to buy up. But if you break it, you come to grab this liquidity and buy up. If you cannot, then forget it. The next point you're looking at is point to point. So in sequential order, then because it's still bullish above 200 moving average. Even if you go to 5-minute time frame, you're still going to find it bullish, right? Dude, that's crazily bullish, right? So that was a pullback. Then continue to buy, right? So even if you cannot know anything, you want to tell yourself anything above 200 moving average is bullish or it's an uptrend and you want to follow to line. Okay, so oil is down giving his own money. Why what's this guy? Euro is trying to reduce its money. So euro, oh yes, now back to $1.6. That was almost negative the other time. And so let's look at this guy, back to $7 negative. That was $10. Now, so you don't expect that, okay, you are going to see green all the time. It's if you know what you were doing, you don't get bothered about them because you already set your strategy and all of that. Okay, you can see oil now. Oil has pulled back, and then this will begin to actually address itself up. By the time you take out this high, you see that these are major pullback. But we need to be very careful because the MACD has created double top. But at what time frame? 5 minutes. Okay, so go to 15 minutes. What is it giving to you? It's telling you, wow, potentially I'm about to pull back home. So that means this area is very, very important. So that means chances are there that this guy could stop going up from that point. So you want to do this. Very simple. Our usual stuff here, and then you do this. So you are very, very careful to see what happened here. Either a grab of liquidity or a failed rally, right? Or tap into the system and then whatever. So you can see, I say, when the market has moved far, I don't like getting involved in it and all of that so that I will not have issues. Perhaps let me go to my oil. I actually want to close it and so that I can face other thing here. Oh, euros now back down and all of that. Okay. So ability to take decision at the right time is very important. So let me just close this guy. Because now, like I've told you, it's getting more interesting, right? And why is it getting interesting? Though it's bullish. It's a bullish market because, so should I sell? No. In such case, you just want to wait for appropriate entry to buy. Because now, like I've said, so when you mark out this point as a resistance, so what you're looking for is that market come back and hit it and go down, break it, and still return back to this zone. Now look at it, failed rally. So if this one still get here and couldn't bounce, then you want it to return back here and you find a reactive candle to buy, you want to buy. So entry points again help to reduce your anxiety. Okay? Entry point to help to reduce your anxiety. If you enter at the very, so you can see what I'm saying? So you want to see, although this is a pullback because this is 15-minute time frame. Yeah, so you want to find this. You find it difficult to do all these things I'm doing if you are trading too many instruments. So you are still in order here. So because that was a high, this is a low. Look at it low here. Okay. So markets, right? Market could break this and even grab this liquidity because an uptrend. Start grabbing it. Now return up here to break out or grab and then come down. So you want to now say, okay, I think I'm interested in selling. Okay, let's go to gold. Okay, gold is still very fantastic because it's a very strong uptrend. So but the oil, look at it. Look at your MACD. It's already showing a sign of weakness. And so taking profit from one point to the other is very important. Okay. So go to 5 minutes. Are you seeing it? So already failed. And then you break this. Then what do you want? Selling down to the demand zone. Man, if you sell down to demand zone, that would be too bad because it's actually, but the MACD created double bottom, double top already. Okay, so now let's go to, okay, this guy is helping its ministry small. So the same thing we do in everywhere is what we do in synthetics. That's volatility. So which we use deriv to trade volatility and boom and crash. And then we use wet trade to trade volatility. And then their own spike and crash is called pain and gain. So there's a trade I enter here and I forgot. Literally, I forgot. I forgot that I trade here. So, but I don't think it's bad for me. Let me check the trade now. So much profit before is, oops, this guy. Okay, let me check. It should be 20 something dollars. So it's just a small position. Okay, $29. Because I enter, let me see, 6311.43. 6311.43. 6311. Ooh. 6311.43. 6311.43. So let's see somewhere here. Just within this region. I think it's about 3 days ago. I literally forgot that I enter a position. And now, so what do I do? I'm just trailing it. That's the magic 4 hours actually does. So that is if I'm looking at my 4 hours here. So you are looking at a key point as my demand zone. So see where I entered from. That means this, what happened is this. Going by my 4 hours. So I'm a critical person when it comes to following structure. So if I'm going to 4 hours, because I do more swing on some of those instruments. So you can see that jumping around different instruments, well, if you are just a scalper, well, you could cope. Okay? So look at what happened here. That means I even missed when I was supposed to enter this one. Okay? Here what happened? This is a support. The market returned up, came down, grabbed the liquidity, and went up. A lot of people will have entered because it grabbed liquidity and return. And of course, maybe this engulfing candle will have been the entry. So for intraday trader, we have to be interested because they will have made some profit here. Now, the market finishes that, grab this, that make a lot of sense. This is a break of structure. Look at it. So it broke this structure. And here, this is a low, this is another low, right? So it formed a change of character after coming over here. So it broke this structure, you expect it to retest. And they retested, and that's a very powerful entry for swing traders. Okay? So for swing traders, that's a very powerful entry for swing trader. Now targeting up here. Okay, now so the market actually returned back to this point, and then you find an entry. Let's the market continue. So up to now, pull back and continue. So you are targeting up here. Now if you get up here and break this point up, then you can see that the market has a long way to go. So you are looking at this point, but that can be take several days because this is 4 hours. So if we go down to 1 hour, you're going to find the kind of, okay. So what will have happened for this 1 hour? That means the market, this is a trend. Let's go this way. So take my trend line. Yeah. So you can still channel the way we channel. Okay. So this is a high, and here is a low, and here is a high, here is a low, right? Now, why not this? No, right? So this and this high, is it higher than this? Okay, if it's not, then it's a high, it's a low, it's a high, right? It's a low, it's a high, it's a low, it's a high, it's a low. So here you come. This is the lowest. Can we find lowest here? So at this point, here you come. You have ordinarily marked this guy as your support, right? But here's something that happened. The market returned, break the structure, and couldn't break this. It's not valid. But so I haven't marked this point out the usual way. So the market actually came and grabbed it. But instead of returning up, so that's why trading too many instruments at a time is not good. Okay, okay, I think we're checking something. Let me check first. Okay, the BNB is now returning, right? Guys, can you see? So imagine you entertain unnecessary fear. Yeah, so this guy has started. I told you about the trend line. So that means actually grab liquidity from this, because knowing that this is a key level, then so but you need to be careful too, because that's created a supply zone, right? And so we need to break out of that point. If not, that's going to be very disastrous. So oil still find its way up. Okay. Oh, so this guy now. Oh, 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 four. Uh, this guy continued the downward movement. So it will have given us a very bad negative. Okay. So that's why I said this guy. Okay. Yeah. So very bad. So going to hit our stop loss anytime soon. So you know that's going to take out. I think I've forgotten what to put as stop loss, whichever. Okay. So now this is it. This is what happened. This guy is extend, you can see properly. Okay, so very simple, right? This guy you have marked as your support. And so what happened? The market went up and broke it, which is fantastic. You return back here. So you want an engulfing candle. It didn't do that. Remember, this high is still left behind. So this high or this resistance this time around is still left behind. And now the market went up. And so what this market have done now is to create a double bottom. So you now have to change or shift your attention, the flexible man, to this neckline. Okay? You have shifted your attention to this neckline. All this while you're not doing anything. This is double bottom. Now, so what you want is the market to break out and finish up this neckline and retest it. Sometimes the retesting may not come so big to that point, but to an extent close there. Then that means your perfect entry for this trade was here. So your stop loss, right? If you are a conservative trader, that is too big for me. It's 192 points. But remember, this is where the difference comes. The difference comes where because you are find this, you are going down to your lower time frame. Now let's go to 5 minutes. Okay. So this is your 5 minutes. So this is your 5 minutes. So you are not going down to this. So this is the midday swing low. That means your stop loss will be somewhere here. And that give you, let's close this. So 1:2 is already 1:10. So now, so what will happen is this. If you look back to the previous swing high, that will have given you 1:3. 130 point times 0.05. So that will have been 130 multiplied by 0.05. If you use the lowest lot, that's $6. You have like 2 or 3 positions, and then 36 points. So 36 points multiplied by this. So we'll have trail, and then another one. Market came down. So even when you are using now your support and resistance strategy, you will have still been money, right? How? The usual way. Okay, oil is back up, and unfortunately we close it, right? So you can see it still came down here for oil. So you see where I will say this point was respected. Again, now you know why? Because it's an uptrend. So you wouldn't want to go against the trend, and that's one of the lovely things you need to understand. Okay, Bitcoin makes sense. See your MACD. So the BNB is still now doing, the MACD is about to cross. So this guy is not really getting it. So because this is a downtrend and it's still going down. So we said it's going to hit your stop loss because it couldn't cross, and of course already a downtrend. So this is just a pullback, and continuation. You can see that's broke the previous structure. That's break of structure. Here, so there you have this. Now this. Ah, so still selling down and all of that. And that's the danger of trying to meet up with too many instruments at a time. It's very risky. So if we go to our trade now, we'll be negative. And the oil is massively moving to break this point. Once you break it, so we're negative for 1 point something dollars because of the Euro USD. Just look at it. Euro USD. You can see now, almost hitting our stop loss. Remember we said anything below 200 moving average, you are in a downtrend. Make sense? His stop loss, take us out. Boom, we're out. Okay. Anything below 200 moving average, you are in a downtrend. So for anyone who was following, as the market rally up over here. Now, the only challenge is that now, when the market rally up, fake out here, you're selling down now. But the other thing is that this is a liquidity. Will it grab this liquidity and return back? Perhaps yes, so you're watching. Now, I haven't stopped you out because our calculation was not properly done. Even when we saw the profit and I said, if you're just capping, taking small profit, you could close at that 1 point something dollars. So this is a sell opportunity here, another sell opportunity, and all of that. So even if you don't know what to plot, 200 moving average can be plotted so that you be in charge to see when to be selling. If I gave one formula to beginners the other time, say use your trend line, though you are not depending on it, but use your trend line as well as your MACD. For instance, let's look at this now. Let me add MACD here, MACD, and trend line. So EMA, 1, 2. So let's say 1, 2, right? Just 2 or 3. So 2 is okay. So I go here and I change this guy to red, perhaps to make it more thicker. Ooh, too thick. Change this one to 21 or 14. Probably just make it 14. And make it to be green. Remove all this. So make it to be green and a bit lighter. Oh, yeah, 14. Think something is wrong somewhere. Oh. Oh, it's the same way. The same one I've changed is what I'm changing again. 14. So this one, 200. And then tick, but red. Okay. So let me close this. So this is MACD. So let's go to 1 hour. So I want to trade. Now, you just need to understand, look, remember we talked about price action. So when you understand price action, you now want to support to see your trend just using the MACD. Now, so here you find, of course, lower low, higher high, and all of that. And you are finding direction. And probably you are now in 5 minutes or 15 minutes. Here you go. Getting more interesting. Even before the cross, because you understand price action, you're already in the market. Am I correct? Yes, absolutely. Because at that point, you are already in somewhere here because market's changing. And this is a high. You expect that market get there and reject or react. And it actually did. And you are taking your profit. This is a low, this is a high, this is a low. So you don't need anybody to tell you. Remember, I say entering positions, markets changing. So we have find this. Please always pay attention and understand this. I'm teaching us. Go here. And here you have this. All right. And here you have this. And you can always see this thing play out every time. Very simple. Now, most time, I use 1 to 3 strategy too, right? And what do I call simple 1 to 3 strategy? So let me look here. Take this part. Thank you. Here we go. This is a low, and it creates 1, 2, 3. All right. So very simple. So which you call N pattern, right? You call it N pattern. So here is 1, 1. Here is 1. Okay. Now next is 2. So this is a must-watch episode for everybody. If you're watching me live, you may have to get the video later and sit down with it, and then you'll be fine. Then this is this, but it's very difficult for people to be disciplined anyway. This is 3. So we have 3. Very simple. So now what we say is that this is 1. So you have a line here. Why do you call it 1? Because that's the lowest, which is lower low. So this is a high, which is 2. And this is another low, which is 3. As long as this low didn't break this, it strengthened this low to be strong. So since this low is strengthening, then we have a new low. So you want, so can I enter from here? Some people do, but it's risky. Sniper entry trader enter and put their stop loss below here. But a conservative trader want a break of this structure and retest. It can retest and it won't come below, but never come here. So they are not entering from here. Their stop loss is below this point. So that's exactly what will have happened here. So this is a low, this is a high, and this is a low. And then what happened? This is a break. This one has broken. This is your entry. So your entry at that point, so let's take it long. Your stop loss is actually below this. Some people want to do more conservative trading if the instrument is not too far, because this is 5 minutes, no problem. Then targeting this swing high. That's already 2 point something, 2.2, which is okay. Then that means you can be fine. And then you continue. The trade, remember, this is a point, this is another point. So all these points are liquidity point. So let's go this way. Support and resistance strategy. So you have taken your profit and you are finding another entry. You could stack here, very, very possible. You have stack here and still target here. Now, market actually got here and it's as if it failed. The next thing it was doing what it was doing. That means here, you have marked its resistance, you grab it, return, and then. So even without your trend line, you have find an entry, but this one confirmed that, hey, we're still going down. Now, these are liquidity point and all of that. Market return back here. You are taking profit because you are facing one instrument, and then another points are happening here. This is created more or less like a double bottom, but this is not playing. This is the lowest, and it creates another high. So 1, 2, 3, 1, 2, 3. Okay, this is a high. Right. Right. This is a high. This is a 1, 2, 3. This is a high. This is a high. This is a low. This is a high. This is a low. Okay, here. So you just have found an entry and even perhaps your moving average stands. At this cross is another confirmation that we're going up, just like here. And then you're targeting the market continue. At that point, it become more distance. So the more distant it become, and even changing up direction, the better. So even here now, you are in uptrend, but you have marked this point. And this one have found you to enter. But above 200 moving average, this can be a major correction. Probably if you come back to 200 moving average, you are still finding a buy position. Does that make sense? Okay, you can see this guy has really failed. Really failed. And I'm sure this guy, oh, so you can see, so let's see our oil. Oil is struggling too, but gold is massively doing well. Okay, so if you go back to that, our trade that were in negative, you will see that we're back to positive. Let's see. Or about to enter positive, but lesser in negative. This is a cent, 6 cents, guys. So if you are trading and you are following one instrument, what will you have done? When it come down here, what will you have done? So when the market react here and say, I'm going up, you will have found an entry. Look at your MACD even. You will have found an entry, and that will have given you much money, maybe another $7, even before the market return back. See what BTC2 has done? Come on, massive, guys. Right? So you see now, this is Bitcoin. So 5 minute demand zone. Come on. Come on. Bitcoin is angry. Okay. So wow. Wow. So it's going here. So you need to break this point. So once you break here, so the MACD say is in an uptrend, then but you want to see a breakout at this point. If not, if you get rejected, that would be another terrible situation. Right? So this guy has failed entirely. Okay, so you can see the MACD. the red is even dangerous. Yeah, very dangerous. Because DXY is massively, that means Euro SND will be dumping like a wildfire. Let's see. Easy. That's it. So most time when you want to trade two instruments, let it be a correlated instrument. Of what purpose would you even want to do that? And so BNB, even Solana was reacting massively. Look at it. Okay, so that is what it is, ladies and gentlemen. Thank you for coming. And so I'm sure we could see that. So if I go back to that guy, okay, we are 4 cents lesser. Okay, let me go to the same strategy apply everywhere. So it's just for you to infer the strategy. So if you're well trade, you deploy the same strategy on your well trade, support and resistance strategy, and check all everything. Okay, I think I need to stop at this point. Stop recording.